What's up, everybody? Solomon here. If you see any scam ads on this video, please don't participate in those. So I really wanted to do a video today for the digital asset community as a whole. And, you know, even the XRP community, especially just because we see all of these other projects with these crazy pumps that have been going on lately. And I think it's good just to step back a little bit and to ground yourself. I am not saying any of these projects are bad projects or good projects. I invest in some of the projects that have, you know, pumped, 10x, whatever. But, you know, it does speak in volumes to step back and just know what you've invested in. And I've also had requests to do this video from a tax perspective. What are the tax implications? And just some general tips, I guess, as far as if you plan on trading, if you plan on buying into one of these pumps, et cetera, et cetera. And, you know, this is more a video for you so that hopefully you don't make some of the same mistakes that I made in 2017 and 2018. And then as a disclaimer too, like, I don't trade. Maybe I should, you know, with as much as I look into this space. It's something that I've started thinking about doing, but it's something that I've never pulled the trigger on doing as well. It just makes me a little bit too nervous. So I try to more so invest for the long term, which has to deal with the tax implications as well. And by long term, for me, long term is like 3 years, 3 to 5 years. But long term, as far as capital gains, is anything more than 1 year. So we can see right now, these are the past 7 days, the most returns. I've never even heard of Just. Numeraire, I've heard of Band for sure. Now, I think Band is like 15x or something like that, or like 10x over like the past month and a half, which is crazy. I don't ever buy into these pumps whenever something's up, whatever they are, you know, this 207% in a day. I won't buy that. That's just my opinion. I could be completely wrong. So I want to make this video for you guys. I know, and ladies and gentlemen, you know, ladies in this space too, you know, this isn't just about guys, because I see there's just it's a very male dominated space. But for the women that are in this community, you know, thank you for participating, because we need more of you in this space to to ground some of us guys, I guess. So this is 9 rules of crypto trading that helped one trader go from $1,000 to $46,000 in less than a year. And we know, as far as crypto is concerned, that's a lot right now, but, you know, back 3 years ago, that wasn't a whole lot. And I do think that we're going to have multiple situations like this in the future. And like I said, I don't even trade, but some of these rules that they go over here are sound advice for anybody that's getting into the digital asset space. So I hope you guys enjoy this video. I don't care if it gets a lot of views. This is something that just needs to get put out. 9 rules of crypto trading, okay? First one is only invest what you can afford to lose. Okay, during the recent crash in January 2018, hobby investors got burned. Frustration and losses, broken monitors, smashed laptops, lost keys, etc., etc. So only invest in this space what you are absolutely willing to see go to zero. And that's the mindset that I've had since 2018, since the bull market ended. And that's the mindset that I still invest with now. I don't change my lifestyle at all for digital assets. Now, obviously, I do a ton of research and make these videos for you guys, but from an investment standpoint, I don't change my lifestyle. That may or may not be the right decision in a couple years, who knows. Always pay attention to Bitcoin. Most altcoins follow and are pegged more closely to Bitcoin. Now, this is still somewhat true to today. I mean, for sure it is. We saw Bitcoin just breaking resistance. I think it passed above 12K for the first time in months, multiple months. And now it's sitting somewhere around 11.5. And we see all these altcoins that are completely exploding right now. You do need to pay attention to Bitcoin, because Bitcoin still, unfortunately, controls the market. The market is not driven by utility right now. It is 100% driven by speculation. And there is a lot of mistakes and a lot of money to be lost if you follow speculation. There's also money to be gained, but it's extremely risky. So pay attention to Bitcoin and what Bitcoin's doing with price action right now, at least. Never put all your eggs in one basket. I talk about this all the time on the channel. I have been more so diversifying more than ever over the past year, I would say. I hit a goal with XRP that I was comfortable with. I still obviously add to that goal every once in a while, but it's not like my entire investment doesn't go directly towards XRP every time I invest into digital assets. You know, I try to spread stuff out a little bit. Like I said, multiple winners. And they don't mention it in here, but another good thing to pay attention to, and just as good practice, is never invest into more digital assets than you can actually pay attention to. So, you know, there are some people that probably have 50 or 75 digital assets. That's fantastic. There's no possible way you can pay attention to price action and to news and everything else that's going on a daily basis if you hold that many. I believe right now I probably have somewhere around 20 to 25 at the very most. But okay, never put all your eggs in one basket. There's a lot of people in the XRP community that are all in on XRP, and that's fantastic for them. You know, consolidated positions generate wealth is the saying, right? But diversified positions maintain it. Now, in digital assets, I believe that diversified positions give you more of an opportunity to potentially gain wealth. So XRP, and it brings up a great point. The space as a whole is growing so much. And do you think that one coin is going to drive the entire market cap of the entire crypto space? There's people that talk about XRP doing that, but I am more of a realist. You know, I think that there's going to be multiple coins driving the entire market cap of the entire crypto space. So, all right, don't be greedy is another rule here, okay? No one ever lost money taking profit, and that's true, and I'm bad at taking profit. I buy and I hold for long term. As the coin begins to grow, the greed inside us grows along with it. If a coin increases by 30%, why not consider taking a little bit of profit? And the best thing, and like in my opinion, if I were to take profit, I would love to just take profit so that I get what I invested back, and then just let the rest sit in there like free money. So, all right, another one is don't invest blindly. So don't invest without doing research, right? And there are so many people in the digital asset space that still today don't research at all and invest in these. I mean, there was a post for a digital asset that I invest in, and it went to a dead link on Twitter that the company put out, and it had like 28 likes before anybody even said. And I was the person that said, "Hey, this is a dead link. You guys need to update this." They updated it, obviously, but it just goes to show you, like, people like things blindly in this space. People invest blindly, equally so. So please don't invest blindly. Here's the big one for me is do not FOMO. And again, none of this is investment advice. I'm just a dude speaking to you guys. Hopefully I come across as a real person, because I am. And I care about you guys and the money that you put into the space. I'm sure most of you have families. Even if you don't, it's your money, right? Don't FOMO, okay? Now, if you were here in 2017, there was literally like one announcement that drove the price of Bitcoin from like $7,800 up to like 19,000 some. So that was the futures announcement, I believe, as well. So I mean, even if in the crazy world of cryptocurrency, if a pump happens that quickly, it will correct. It is just a matter of time. Speculative pumps are almost followed by dips. Trying to jump onto a train going full speed sounds like something straight out of a James Bond movie. I'm sure most of us can agree. We would probably save some limbs if we just waited at the next stop. Now, this is categorize your investments and look at the long picture. I 100% do that. I have what I would consider more short-term investments in this space. You know, just to be completely transparent with you guys, I invested just a little bit of money into Chainlink, right around, I think it was less than $1. You can see it's at like $15 now. Now, the amount that I invested isn't anything to write home about, but it is an amount where I know that I've, you know, reached a point where I may consider selling a portion of that at least to get my money back, and I leave the rest in there to ride. I don't know, but this is categorizing investments and looking at the long picture. So what projects are you invested in that you've researched that you want to hold for 3 to 5 years? What projects are you invested in that you've researched that you want to hold for 1 to 3 years? What do you want to hold short term? I personally don't hold anything less than a year, or at least I try not to. Now, if something pumped crazy, like 100x, I'd 100% be selling within that year, but I would be inflicted with capital gains as well. Now, down here also, always learn from your mistakes. Never accept a total loss. Always evaluate your next situation and try to figure out why it happened. That's what I've tried to do since the bear market occurred, beginning of 2018 after that massive bull run. Take that experience as an asset for your next move, which will be better because you now know more than you knew before. We all start off as amateurs, 100%. If you were doing active trading, set stop losses, and we'll go over stop losses here in a second. I think, though, even if you're not doing active trading, setting a stop loss isn't a bad move. So, edit number 10, always check the ticker symbol. I don't know if that is for arbitrage or what it is. So, all right, now this is a stop loss. If you're not aware, now Coinbase, many of you may just have Coinbase. I have Coinbase, I have Binance, I have a few other exchanges that I primarily go through. I try to stick with the regulated exchanges or the ones that are more following the regulatory guidance that we at least have right now. Now, but Coinbase Pro, you can log on to Coinbase Pro if you just have a Coinbase account. It's the same login, it's the same password, everything. But it offers more options, and you can deposit into Coinbase Pro directly from your Coinbase account pretty much instantaneously. There's more options from a trading standpoint, and in my opinion, there's more options from a future planning standpoint and from a protective planning standpoint. You can set a stop loss, okay? Now, if you're not aware what a stop loss is or a stop order, stop orders allow customers to buy or sell when the price reaches a specified value, known as a stop price. The order helps traders protect profits, limit losses, and initiate new positions. So if I buy, for example, Bitcoin, which I hold none of, at $11,500 or whatever it is right now, and it goes up or whatever, if I buy it at 11.5, I can set a stop loss at 10.7 or 10.8, so that if it dips below that, my sell order is triggered, and then I protected whatever amount of profit I feel comfortable, or not profit, but whatever amount I'm willing to lose. I don't lose too much of my money. Same thing goes with from a sell order. If I buy at 11.5 and I want to trigger a sell order at 12.5 or $13,000, my order's already on the books. Once Bitcoin hits that, there's enough liquidity to eat up my order. I profit that way. So I probably should use those a little bit more. Like I said, I hold for long term, but I'm just trying to present all of this for you guys. Now we get into Guide to Cryptocurrency Tax Rules. This is from Forbes. This is earlier this year. Now, I believe this is probably just US based. So for those of us in the United States, okay? For those of you that are not aware, cryptocurrency is considered property in the US. Bitcoin and its competitors look a lot like money. Store value, means of exchange. The IRS has decreed that these assets are not currency and not securities either. That's just Bitcoin and Ethereum so far, so this article is a little bit flawed, but we know that Bitcoin and Ethereum have been basically deemed not to be securities. They are property, more like a shopping mall than like a $100 bill. As capital assets, they give rise to capital gains and losses when disposed of. A profit is taxable as a short-term gain if a position has been held for a year or less, as long-term if held more than a year. So obviously, if you sell within a year, you're going to be held much more responsible for a higher tax level than you would if you hold longer than a year. So if a coin is held for profit rather than amusement, which is presumably almost always the case, then a loss is on a deductible capital loss. Now, we get sales are not the only form of taxable transaction. I get questions like this still all this, today, even today, about what's taxable as far as what I'm doing with my digital assets. You have to report the disposition of a virtual coin if it is sold for cash, traded for another crypto, or used to buy something. And now, if you transfer coins from a wallet to an exchange and you're staying within the same coin, obviously it's not taxable. The tax code's wash sale rule does not apply. This rule forbids the claiming of a loss on sale of a security if you bought the security within 30 days before or after. So, for example, if you buy a Tesla share at $800 and then sell at $720, then buy it back quickly, the $80 loss is suspended. This does not apply for crypto. Exchanges squeal. Now, if you trade a lot, the exchanges are basically presenting your trades to the IRS. Now you'll be presented, and you can get a CVC report or whatever. But there's multiple compilation softwares that will compile your trades, and you can actually upload it into something like TurboTax or whatever you want to use. But just keep in mind, these exchanges, especially more of the regulated ones, are taking account of what you're doing, how often you're trading, et cetera, et cetera. And if you trade a lot, and if you trade in high volumes, and you put a lot into the exchange, you better believe that it's being reported to the government. So forks can create ordinary income. When a share of stock splits in two, by and large, there's no taxable transactions. That's stocks. If its purchase price gets carved up and assigned to the two pieces, you declare a sale on either of those pieces only when you dispose of it. If and when you do sell at a piece at a gain, you'll get the favorable capital gain treatment. This is what would happen if one share of Exxon Mobil split into one share of Exxon and one share of Mobil. Now, the IRS has a different view of coin split-ups that occur when a blockchain forks into two chains, so we can see what happened with Bitcoin and Bitcoin Cash. It thinks that the split creates a windfall equal to the starting value of a newly created coin, and that this windfall should be taxed as at high ordinary income rates. This is what happened with Bitcoin with the fork of Bitcoin Cash. Each old Bitcoin continued to live on one chain while newly created Bitcoin Cash on the other chain was dropped into the lap of the Bitcoin owner. You were supposed to declare the value of Bitcoin Cash as ordinary income. It's a good bet that many coin holders neglected to do so. And I believe that I actually was invested in Bitcoin at this point in time and did get a portion of the fork. I think this was like August 2017. Maybe it was a little later than that. But I never did that. So airdrops create ordinary income as well. Mining creates ordinary income as well. Staking gives rise to ordinary income. Gifts of crypto to charity get treated like gifts of stock, but only up to a point. If you buy a coin at $4,000, wait more than a year and donate it when it's worth $9,000, and you get a $9,000 deduction without having to pay tax on the $5,000 gain. But gifts of property worth more than $5,000 need appraisals, so this can get messy. Gifts of crypto to friends and relatives are treated like gifts of stock. Say you buy Bitcoin at $12,000, give it to your niece when it's worth $11,000. If she sells it more than $12,000, then she uses $12,000 as her basis. If she sells it less than $11,000, she has to use $11,000 as her basis, reducing the capital loss that she can claim. Any sale between 11 and 12 is a dead zone that creates neither a gain or loss. Like-kind tax postponement does not work. Bitcoin futures are Section 1256 contracts. So, I'm not the most overly vested into all this stuff, but I do think that it's very important that you all look into the tax implications. I think it's very important that you all look into rules of crypto trading / investing if you plan on doing either of those things. A lot of the rules in trading, in my opinion, fall hand in hand with the rules of investing. Never invest more than you can afford to lose. Like I said, set stop losses. Buying into FOMO is scary, right? I bought into FOMO prices in early 2018, and my profits completely got squashed. I lost a lot of what I had gained. I'm not saying that things like, Chainlink, things like, Band Protocol and all these other initiatives are going to fail. There's no way, there's no way I would say that. I'm not going to tell you that because I don't know. I would be lying to you if I told you I did know. What I am saying is when you see pumps that are completely unsustainable, there's going to be a correction. If you're interested in a project, we are still so early in this space that it makes sense to me to wait until there's a little bit of a correction so that you can afford to, own more of that digital asset that you're interested in, and not to invest more than you can afford to lose, but to gain more than you would have done if you would have bought at, the top of a pump. So, we see back here, this is Forbes. Forbes encouraging readers to buy Bitcoin at all-time highs. And this was even happening in December when Bitcoin was right at the all-time high. So this was in June. I don't remember what Bitcoin was at. It was probably like around $8,000 or $9,000 back then. But then in December when Bitcoin was like literally at like 18.5, you saw all these main news outlets saying 50K, 100K, et cetera, et cetera. So this is just a little bit, buyer beware here, because it's interesting for me to see a coin pump, 15x its price that it was a month ago. And then you see all these people talking about, oh, it's going to go to this price. It's going to go to this price. Like, okay, dude, I believe you, but I'm not going to buy at all-time high. That's my personal opinion. I won't ever do that from now on. Now I will buy if there's a little bit of a correction, because there are tokens and coins that I've been looking into. So I hope this was a little bit valuable for you all. I'm going to be taking a break here. I may do a video tomorrow. I won't be around Friday, Saturday. So I'm going to post all the links on the YouTube to this, but there's multiple different research articles you can find about investing, multiple ones you can find about the tax implications of buying digital assets on a by-country basis, I'm sure. And I hope this was helpful, and I hope you guys all have a great rest of your day, and ladies too. So have a great evening. Later.